No, I'd be more likely to say that it went up because now we have a split House and Senate. The market has done best over a long period of time with some gridlock in split House and Senate.
So it was as expected, so the market went up. So if the Democrats had won the Senate and the House, do you think we would have been up 500 points?
I think that would have been a little less likely. And it's not a political point of view.
No, I know.
It's just
I know.
that when there's one party dominating, there's more policy.
Right, but if someone were to say that the market would decline if the Democrats won, if there was a big Democratic win, it might not have been quite as positive for the markets.
I don't think you would have had that big snapback rally.
Yeah, it'd be hard to even make the other case, I think, with a straight face. But anyway, so from here, where do you think we're headed?
Well, now that we do have that gridlock, it's generally a bullish sign. We're back to where we were before, 26% earnings growth in the last quarter. The recession doesn't look like it's anywhere too near, and valuations are reasonable. So I think you have to be more or less bullish, but not necessarily across the board. We still have quantitative tightening. It's a challenge for things like emerging markets and junky or small cap stocks, but certainly overall some reasonable opportunity.
Valuations remain or are reasonable only if you believe that earnings for 2019, that estimate has not changed, right? Because, I mean, in terms of price level, we're back to early October levels. In terms of the earnings outlook, if you believe the earnings are just as strong, then fine. But if they come down for 2019, then maybe not so much. So what are you seeing for earnings growth in 2019? Because companies seem to be a little mixed on that.
I think that's actually one of the key questions for the markets today, right? I think that there's a huge debate going on about peak earnings and what that means for the market. First of all, I think you need to define what peak earnings is, because if you're really talking about true peak earnings, that means the dollar amount of profits is going to start to decline, which would imply negative earnings growth in a profits recession. I don't see anything like that in any of the indicators that we look at, so I think that's actually very bullish for the markets. But if we're talking about peak earnings growth, I think if you look historically, there's a lot of people that have gotten very bearish on the fact that growth is actually going to start to slow. But if you look historically, that's not a bear market signal. It's actually, if you look at, since 1980, you've had 11 different peaks in profit growth. 90+% of the time, you have actual positive returns over the next 6 to 12 months, and usually those returns are very good. So anybody that's going to get very bearish on this, hasn't really looked at the history. So the question next year is, what people are extrapolating is, are we going to go from 25% to 15 to 5 to 0 to negative? And I think that's a little bit premature.
Or they're just, you're right, because what caused the sell-off was Powell angst.
Exactly.
So if we grow less quickly in the bad news, good news, warped view that market participants have, maybe the Fed is not quite as aggressive.
And where did the angst come from, right?
It came from things grew too good.
Yeah,
right,
exactly.
and profit margin.
Well, that means that you still believe in a Jerome Powell put in the market, that the Fed is going to ease off if growth slows down.
They're still linked. Stocks and bonds are still linked.
Yeah. But I think one way to think about it in terms of companies that are going to be more likely to keep the earnings momentum going in 2019 are those with pricing power. And it's important this cycle for two reasons. One, of course, you need some pricing power if inflation picks up. But two, to preserve the benefits of the corporate tax cut, which will be priced away for a lot of companies.
I don't remember.